And it's obviously that time of year, right? It's Halloween time.
It's literally right around the corner, which is pretty amazing, like how fast the year went and how fast really September went.
And how fast life goes, eh? To be all existential, what do you think?
I mean, life goes by pretty quick sometimes.
Yeah, that's why you need to buy a house. Don't waste time.
Don't waste time because, one of the myths that sometimes people think we're going to wait and it's going to be better. I don't think it necessarily ever gets better in terms of the price point, Todd. And I think the myth is that there's going to be a bubble and the bubble is going to burst. I don't necessarily think that's what the situation is going to be here in Nova Scotia. And I think we've talked about it a little bit, obviously, that we might have renormalized our pricing a little bit. And maybe it was low, artificially.
Or maybe it's artificially high now.
I guess only time will tell. And there's certainly lots of myths that we kind of talk about all the time with consumers. And, in October, we're talking, about myths. One of the big ones is around people think mortgage brokers and mortgage lenders are the same thing.
You mean you're not the same thing?
Imagine.
Back to the French.
I know. The lender obviously
mix it up and use some Spanish or something.
I don't know any Spanish, so maybe I'll have to learn some by our next time around.
Yeah.
Lenders provide an actual mortgage themselves. So, we deal with a lot of the big five, for example.
Yeah.
You can walk into the branch and you can get a mortgage, or you can get a mortgage from the same lender through us.
Yeah.
We basically facilitate the mortgage, and we are a broker. I think to help people understand a little bit, we review things like income, assets, and credit and figure out where the best fit for that customer will be. And we do a lot of the work that would normally be done by the branch. So we collect documents, we review the credit, we submit the application to underwriting, where a branch would submit to underwriting. So it's similar in a way, but we are basically like Costco.
Yes. You just sell the products.
We basically connect the borrower with the lender, but we're only doing one type of product, and it's just toilet paper. That's all we do all day long, and we're really an expert just in this one niche, and I think that's what's so valuable. Mortgage lending is a complex widget.
Yes.
And it can be daunting for a lot of people.
So if you're the lender, they pay you obviously a fee. The client doesn't pay you a fee.
Yeah,
it's important to know.
The lenders pay us for sure.
Right. But it's worth it to them because A, they're getting the business, and B, you're bringing them clients, but you're doing a lot of the work.
Yeah, we do the bulk of the work, obviously, and we have a bit of an economies of scale where typically a customer will get a lower rate from us than they will if they walk into that same lender. I know necessarily shouldn't be that way, but it is cheaper to deal with me than it is to deal with, maybe the employee at the branch. They're not paying me a salary or paying the rent in my office space. We're doing those type of things. So it does, and we give everyone the lowest rate that we can. I know a lot of banks kind of price on a model where our clients, obviously we try to give them the very best rate that we can. Another big myth that we talk about all the time, Todd, is, a customer's credit has to be perfect to get a mortgage.
Mm-hmm.
And that's not true. I hope people know that by now. But I still get inquiries all the time to say, maybe I've had some credit challenges in the past. My credit isn't 900. It's out of a score of 900. But we see customers all the time that maybe have a score that's decent, but maybe they had a bit of a nuancy period in their life that maybe they missed some payments. You can't change it, but I think if we have a good story, obviously we can present the best foot forward. Another big thing is around utilization. And sometimes that's just a snapshot in time. We see customers all the time that buy a home 5 years ago. They do a bunch of renovations and they put the cost of those renovations on their credit cards and their lines of credit, and the utilization has brought down their score.
Mm-hmm.
They still have good credit, quote unquote, but the score is low due to the utilization. So we can make some...
Define more what you mean by utilization for those.
So utilization would be basically the amount that they owe compared to what their credit limit is. Mm-hmm. So maybe they're high on their credit, or sometimes over limit. That can really be a killer to that score. And it doesn't necessarily mean that you can't get a mortgage. It just means maybe it might be a little more tough for us to make it work. And depending on obviously where the property is located, there's a variety of different lenders that will look at clients with lots of different kind of credit matrices as well.
Yeah, well, you say it would be harder, obviously, to pull it together if you've got credit issues, or not to say that you can't, but it will create challenges, and you probably will pay. And again, this is why it's good to be a broker like you, because you can go to different lenders.
Of course.
Yeah.
And it's not necessarily that you'll pay a higher rate. It may just be that we have to do some work with you before we can get that approved with a normal traditional lender. And the one advice that I have on credit, Todd, is make your bill payments on time. I see it all the time. I see clients that have, a $30 credit card payment that they don't make. The number one issue, I think, is probably cell phones. The number two issue is student loans.
Yeah.
And people are like, oh, yeah, I deferred my student loan payment. No, that means that you missed the payment. They're going to report it late to your credit bureau, and you just don't have to pay them right now. But I would say cell phones, student loans, definitely a huge issue. But it still shocks me to this day. People are like, well, I made all my car payments and I made all my mortgage payments, but they missed like a $10 payment on a credit card. Like that, it stays with you for 6 years.
A $10 payment missed stays for 6 years.
And that can really drive down your score. So I think knowing when your bills are due are obviously very important. I think, opening your mail is important. If you move, change your address. These are some basics. And you think common sense is common, but it's not always that.
Yeah. So a small little balance of $10, the credit card company, they'll send that to the credit bureau?
Oh, yeah, they'll mark that as late. If you're more than 30 days late, they'll mark it as late.
Oh, is that right? And how much would that impact your credit score?
One missed payment, it's hard to say how much it will. It kind of depends on what the rest of the matrix of your score looks like. Mm-hmm. And it depends on how recent that late payment was. Obviously, if we look at it today and it's reporting as late on the credit bureau, that'll bring your score down.
Right.
If you look at it a month or two from now and you've brought it back up to date, but there was a recent missed payment, that'll probably bring the score down. But the further that we get away from the late payments, and if everything else is in good order, things are paid down, low utilization, it'll probably bring the score back up. And the score really, sometimes we work with customers and within a month, or 2 months, 3 months, they can increase their credit score sometimes by 100 points.
Wow.
But
just
it's doing some
a few little things.
Small things. And sometimes there's errors on consumers' credit reports that, we're able to fix. We're able to do a commercial investigation. We deal with Equifax here. And we're able
What's the other one?
TransUnion.
Right.
And we're able to, work with the customer to be able to get that credit score to really where it needs to be. We want to present the best foot forward when we are submitting a file for approval. And, it's not all just about credit, Todd. Obviously, that is a big piece of the pie, but it's not all of it. The income and the assets are also, play a big role in that mortgage approval. The other myth that we really do hear quite a lot is it's impossible to buy your first home.
What do you mean it's impossible to buy your first home?
First-time home buyers think that it's just not possible to get into the market right now.
Yeah.
And for some of them, it might be challenging. But let's think about Toronto a little bit. Mm-hmm. If you can't afford to live downtown, I know people who work in downtown Toronto that live an hour and a half outside of the city. Mm-hmm. Yes, it might be less than ideal. But if you really want to get that dream of home ownership, there are homes available. It might not be an HRM, but maybe it's going to be in a more rural area of the province of Nova Scotia.
Right. You can drive.
You can drive. And if you, we're in a driving culture here, let's be honest.
Yeah.
But I think the culture's changed a little bit, Todd. More and more people are working at home. Yeah. And more people kind of have changed the way that they're working. So maybe a more rural property could work for you.
All right, well, we need a break. What do you want to talk about next, Clinton? You're the guy. You're teeing things up today.
Maybe I'm the host today.
Sure, you're the host.
I'm sure we'll talk a lot about, obviously the fall. We can certainly dig into some other issues around like what happens at the
I'd like
kind of the
to,
back
I'd like
end
to
of
talk a little bit more about credit, if you don't mind.
Yeah, you know what? We love talking about credit, and it's certainly a big piece of what we
Okay,
do.
we'll be back on News 95.7.